Hello everyone. Sorry, I was on mute. Now can you hear me? Please 100 to confirm that you can hear me. And if you can see my screen, also please confirm. Great. Thank you. Okay, so we are waiting for the rest of the team. I think we started now. We are waiting for Dr. Farah. So let's wait for Dr. Farah. Dr. Farah, where is she? Sorry for being late in the setup. Okay, so I believe we are good to go. Okay, maybe Dr. Farah will join us later. Let's start now. Now we are just have a couple of minutes. We need a couple of minutes to be able to start. Hold on, please. Okay, so okay, guys, let's start. Nobody in the meeting in the waiting room, so let's go ahead and present our training today for financial modeling to be able to be expert in financial modeling. Okay, so today we will discuss valuation. The last session we discussed the 3 financial statements, how to build it using the financial statement and the assumptions using our Excel. So we did that already. So let's start with business valuation today. So business valuation, why we are performing business valuation? To be able to sell a business or to raise the money from a bank or from a corporate equity holders, or to make initial public offering, impairment test, estate planning, bankruptcy, acquire business, all of those purposes. Why I need to know the value of the company. This is the main thing I need to know, the value of the company, how much it's worth. So to be able to know how much the company worth, we need to do the valuation. This is the main thing to do. So let's go ahead and see what is the meaning of valuation and what is the valuation techniques. Okay, so first I need to ask every and each one of you, please, in the comment, tell me what is the meaning of valuation. In the chat box also, please tell me what you think about valuation. What is the meaning of valuation? Okay, so valuation is to know the value of the company. The value of the company here using 3 techniques. The first one is cost approach. Second one is market approach. Third is discount cash flow, which is intrinsic value. So let's here start to use the pointer, the pen. So cost approach is the normal cost. I ask you, you have to relate it to the real life situation when you're going to know the value of building you have built on your own. So what you will do, first you will go to see the cost of the land, then you go see the cost of the building. Okay, so this is the cost of the building, the land and the infrastructure and the building itself. Okay, so this is the cost approach. Second way is to know the market approach, which is I am willing to sell this building. So this building worth how much it in the market. I have in this street, I have 1 building, 2 buildings, 3 buildings, 4, a lot of buildings I have. So this one worth 100, this one worth 120, this one worth 150 because it's a better look or a bigger, more space. This one is 990,000 or whatever. So this is the value to sell these buildings based on the demand and supply. So what I have done here, I make it relatively. So this is my building. I need to know how much it's worth. So I will take this one and this one, this one and this one and see my space. So I will say, for example, 130K, which is the value of this building. So the value of this building will be based on the market, based on relatively, which means I have this building worth this much, this building worth this much. So it's relatively my building worth this much. So it's relatively. So this is for a simple example in the building. But what if we are talking about companies? How to know it? So if you're talking about companies, public company, okay, it will be have public company here means listed company in the stock exchange market. So if you have a lot of companies in the stock exchange market, so these companies will be having comparables, like I will see how much it's worth based on some ratios. We will see it later. This ratios will show us how much this company's other companies worth. So based on that, my company, how much it will worth, this based on the comparison between the other companies in the same industry. Okay, the other thing, which is precedent transactions. This precedent transaction means if one company bought another company or another company merged with another company. So this all transactions will result with some ratios and some results. So based on that results, we will have the result at the end, which is we need to reach to be able to compare with our company. So this is market approach. Discount cash flow, which is intrinsic value. This means how much the company will give me as a value. If you are going to buy one company, this company will give you revenues and cash in the future for 5 years continuously, 100,000, for example. So this company worth the future cash flow, not the current cash flow. Okay, so that's it. Yes, exactly, Shahd, great. We can also ask for someone to make the appraisal. Exactly, this is for a simple exercise, which is a building. But if we're talking about the company, we have this 3 approaches, 1, 2, 3. So this is for valuation techniques. What our focus today? Our focus today on discount cash flow technique. We will see how to do it using Microsoft Excel. So let's move on and see what we have. So I will ask you one question. Is it the valuation? Is it a science or art? So I need to know what you think in the chat box, please. Is it art or science? Chat, yes, it's art. Okay, so Layan, Dalia, Talal, okay, Shaima, tell me what you think. Is it art or science? Okay, so what I need to say here, it's yes, it's partially art. It's exactly, it's both. Great, Talal. So it is science until you reach those numbers. Once you have these numbers, okay, and you have this graph, for example, this is a company. This company called ABC, for example. This company have this way of valuation, which we said about that one, public company comparables, reached minimum $22 per share, 49 maximum per share. This, I used science to reach that. Here also, I used science to reach that. Discount cash flow, which you'll learn today, I used science to reach it. Discount cash flow, blue sky, another one. Here, 52 weeks, high and low price in the stock exchange market, the demand and supply. Okay, that's it. Okay, so what we are saying here, okay, what we are saying all this to reach this graph, which you call the football field chart. It's science until we reach it. Now, once we have the data, we need to start our art based on our experience in the market, based on our background, based on a lot of things. We have the art to decide if I'm buying or selling the company. I will ask for specific price, or I'm buying some shares or selling some shares. So I will start to make a bid that I need to buy this share for 25, for example, dollars. Based on what? Based on the data I have, I decided to buy it for this price. Later, I will go and select another one. As a selling, I need to sell it for 30. I will not sell. So this is sell, this is buy. Okay, so we're going to reach some negotiation. Okay, to reach a specific price we are targeting. Okay, so excuse me, I want to do something. This is excuse me for the one who was writing in the chat box. I make it. I blocked him. So sorry for that. Let's continue. Okay, so this is the negotiation. So here's the art. The art is here. Okay, so let's move on and see what we have here. So what is the difference between enterprise value and the equity value? Enterprise value is that I have enterprise, which is representing the asset value. The market value, which is the shareholders' value, because there is a lot of money which is I acquired through it. Like, for example, saying that NBV, which is net present value, we will learn it today. This NBV equals to, for example, 100,000. Okay, make it simple, 100,000. So this 100,000 we need to say how much the shareholders have from that. So we can say they own 80,000 from that 100, and there is a 20 debt we have to pay it. If we're going to sell this enterprise for 100,000, we will take in our pocket 100, okay, and we sell the company. Then we will pay to the debt holders, the banks, which is the debt investors. We will pay 20K their portion in the company, and the remaining 80K is our own money. That's it. To make it simple, we will learn more about that. Okay, so let's go for intrinsic valuation, which is discount cash flow. And I need more participation, please. So I will start now asking, and please try to answer in the chat box as much as you can. This is helping me a lot, please. So let's go now and go for valuation. For the first thing, assume you want to invest in a bank, okay, amount of 100, okay, with 10% for 2 years. So what is the future value? This is the requirement. Can anybody tell me how to calculate it? Simply how to calculate it, I will draw a line, which is the timeline, starting from here, $100 in minus, okay, $100, I will invest it, taking 10% annually. So the first year, year one, how much I will get? First, this one, I will get here 110, which is 100 multiplied into 10, so plus the 100. So the formula, the future value equal to the present value multiplied into 1 plus I. So let's translate that. Present value in our case is 100. Multiplied into 1, which is the original, the 100 or whatever, plus the 10%. So this is to get it for the first year. What about year 2? How to get it? If I asked you, let's make it with calculator to make it simple. Yes. Shaima, perfect, Shaima. Thank you. So, excuse me, I'm opening the calculator of the laptop. It's opening now. Yes, here it is. Okay, so 110. I need to get the second year. I already invested the 110 because I own the 110 in the first year. Okay, so I need to get the 110 multiplied into 1.1, which is 1 plus 10% to reach 121. So 121 after 2 years I will get. So all of that. How to reach, to make it shortcut, no need to make it 2 steps. No need to make it 100 multiplied into 1.1 multiplied again to 1.1. I need it to be quickly, to do it quickly. So how to do that? Simply what I will do, I will say here raised to power t, which is time, the number of the years. So here it will be raised to power 2 because it's 2 years. That's it. So if we do it like that, so in this calculator it will not be easy. So let's open a blank Excel sheet. And here, let's do simple. Here is 100. Okay, so equal that one, 100 multiplied into, open a bracket, 1 plus 10% raised to power 2, which is using that asterisk, shift plus 6, which is this symbol, raised to power 2. So we will reach 121. So how to make it quickly? There is a formula called FV, which is future value. This future value, first thing is required to make it 10%. Okay. So 10%. Number of periods is 2. Payment. Let's open that one to be simple and easy for everyone. So 10%, I will fill it. Second thing, the number of periods is 2 years. Payments is 0. Okay, there is no payments. Present value is 100. That's it. Enter. It will reach 121. For sure, it will be with minus. Okay, so what I will do? I will make it, okay, with minus at the beginning, like that. Before FV, I will make this symbol with minus, so it will be this much. So please confirm with 200 if you got it so far, if you have no issues, so we can continue after that. So now we understand the concept of future value and how to do it on the formula over the Excel. Okay, so that's why I'm explaining the concept here. Okay, so let's go for something else, which is called present value. How much is the present value we need to know? This is very easy, which is the opposite. We said last time FV equal PV multiplied into 1 plus I raised to power N or T, whatever, both of them is okay. So how to convert that to here? Simply, I will do here, transfer that to here and transfer that to here. So present value will equal future value divided by 1 plus I raised to power N, which is, I transfer that to here and keep everything the same. So this is the new formula. So how to calculate it? Simply, without the timeline even, 160 divided by 1 plus 10% raised to power N, which is the number of periods. We said here also 2 years. So to make it simple, 2 years. So the result also will be from Excel. Let's see here how much we have. We have 160. We have to do it like that. 160 divided by, instead of multiplication, 1.1 raised to power 2. That's it. So it will be 132. Or we can use the present value formula. The present value formula same, 10%. This is the rate, 10%, comma, number of periods are 2, comma, payments 0, future value is 160. So it will be 132, same number. That's it, guys. I hope you enjoyed the future value and the present value. Please comment with 300 if you are convinced and you don't have issues so far. Please, in the chat box. Okay, so let's go for more complicated case study. Okay, and continue as we are doing. Okay, so let's see. Yeah, 300, please. I'm opening the chat box especially to hear everyone. So thank you for not looking at any chat else, any other chat. Thank you. Okay, so whoever is not practicing and not doing anything in that meeting, I'm banning. So thank you. So let's see. Assuming you want to buy a candy machine, this is the main thing I need to do here. I need to buy candy machine. So if you want to buy a candy machine, you need to know, is it profitable or not? It will give me the cash I want to get or not. So in this case, okay, so I have invested capital of 1,500 with 10%. The first year this much. So let's draw the timeline, which is the best thing we can do. So first I paid 1,500. This is the first thing. The second thing is 500, which is positive. Okay. Second thing is 600 on the second year. On the second year itself, I have another thing which is 500. So I will sell the machine. So all of that, I will remove it and start to do the discount cash flow. How much it worth this money? So first, I need to know the value of this money today. So I will ask a question. We have gain or loss here. Shall we go and invest in this investment, or we should keep it as it is and don't invest in it? So can you confirm, please? Please confirm with 400 in the chat box so we can continue, please. Thank you, Shaimat. Yes, thank you. Okay, so what I'm asking here, if we make it like simple calculation to know how much, let's see here, 1,500 I will pay, then I will collect 500, 500, 600, so it will be 1,600. So shall I invest it or not? Please, 1 for yes, we should invest. 2 for don't invest. So please, 1 for investing, 2 for not investing. I'm waiting for participation. So I know I'm not talking to myself. Okay, so thank you. Okay, thank you. So the answer here, no, don't invest. Why? Why shouldn't invest in that one? Let's see. The value of this money of 1,500, I am paying 10% as an interest rate. So it's costly. So it's a costly investment. So the cost of this 1,500 is more. So how to solve that issue? I should get this 500 and know how much it's worth today. So let's use another color of pen. Pink color, let's make it blue and see the value of this one today. So 500, how much it worth today? Go to calculator, simply 500 divided by 1.1, it's 454, which is 454. This is the value of the 500. The 500, it doesn't worth something now. In the future, it will be 500, yes, but now it's worth 400. So the other one, both are the same year. So 1100 equal, so 1100 divided by 1.1 divided by 1.1. So it will be 909. So this is also positive cash flow. So positive cash flow and negative cash flow, the net between them is 1500. So 1500 in minus, yes, plus 454 plus 909, which is minus the minus 137. So this is called MBV, which is the value, net present value today for buying a candy machine. And if it's in minus, I should not invest if it's less than the 0, because I'm going to pay interest rate for that. So it will not worth to invest this 1,500 because the cost of this investment is higher than the benefit from that investment, simply. So the MBV formula is, okay, equal to, let's make it clear, let's clear the screen. Yeah, and see the Mbv formula equal to, okay, the present value 0, which is 1,500, yes, this one, plus the present value 1, present value 2, and so on. So this present value 0 is same of number, which is 1,500. The present value of year 1, which is this one, same what we learned last time, will be 500 divided by 1.1 raised to power 1. Okay, here it will be 1100 divided by 1.1 raised to power 2. That's it. So this formula will result in minus 137 as we learned last time. So that's it. Let's move on and see our model in the Excel, which we worked on it last time. Okay, so this is the same case study we have done last time to create the 3 financial statements, P&L, balance sheet, cash flow. If you can recall, we reached that true in the balance sheet. So confirm with 500 in the chat box if you can remember and recall what we have done last time. Alhamdulillah, we can remember what we have done last time. Yes, perfect. So today our focus will be on the ratios, charts, and discount cash flow model. So what we will start with is the discount cash flow model. Then we will go for ratios and the charts. Okay, this is our agenda for today, plus some advanced formulas on Excel we have to use in our career path in financial analysis and accounting. So let's go for the assumptions. So the assumptions here is simple. It is discount cash flow. Okay, it's tax rate, discount rate, perpetual terminal growth rate, current price as a share price, shares outstanding, which is I am holding in this company. Okay, so which is outstanding, not I'm holding only, but it's the overall issued by our company, 20,000 shares only. So first we need to know the future, the free cash flow to the firm. First thing we need to know that. So what is the free cash flow to the firm? This is the main thing we need to know. Okay, so the free cash flow to the firm, we need to have to do 2 stages. Okay, two stages to do the valuation in using discount cash flow. So the value of the firm equal the cash flow for forecastable period plus a terminal value. So it's 2 things. The value forecastable value cash flow plus the terminal value. So I need to ask a question, please in the chat box confirm to me. If I'm doing the financial plan here, as we said, for 5 years, Does this mean the company will close after year 2022? Is it that? This is the end of the period? This is my question. No, the question is no. The answer is no. There is in the accounting principles, there is something called ongoing principle. Okay, assuming the company will keep working till the end. So our forecastable period is that. This is forecastable period. After that, I cannot do any forecast. I cannot see the market, the circumstances, whatever I cannot see in the future. So our target here to calculate something called terminal value. Terminal value is calculated after 5 years and so on. Okay, so this one we will calculate, and we need to know the cash flow for the forecastable period, which is this closing period, the closing balance, cash flow, how much cash flow I will hold at the end of each period, inshallah. That's it. So this is the 2 stages. So let's go back to our model and see. First thing, I need to know the free cash flow to the firm. So what is the meaning of the free cash flow? Okay. Hold on, please. Please hold on. I'm trying to do something. Okay, guys, let's continue. We missed something that we explained, the discount cash flow. Okay, and a lot of things. We will post the full video later. We will see. So now we were talking about the cash flow forecastable period. Okay, so cash flow, free cash flow. What is the meaning of free cash flow? What is the difference between free cash flow and the cash flow we have done last time, the closing cash balance? What is the difference between them? So the answer is the difference is the debt. Okay, so the debt, I should exclude the debt, any repayment to the debt, any repayment to the interest of the debt, any withdrawing of any debt. So all of that, which is this line, I should exclude it. So how to do that? First thing, I need to get the EBIT, interest before earning and the tax, before interest and tax. So how to get that one? I should press equal and go to P&L to reach interest before earning before interest and tax. So where is the earning? This one. So here is earning before tax. Great, I will take this one. Where is interest? There is no earning before interest and tax. So I will exclude the tax by doing plus, because it's already deducted from this amount, 43,000. So I will add it back. So I'm excluding the interest now. So now this number 46 is an earning before interest and tax. Okay, so let me zoom a little bit. So that's it, and we can drag it to the right. So here is the EBIT. for the future periods. This is the first thing. Then after we calculate it, we need to remove the tax only. So the tax, I will not exclude that tax. Not the same. This one, I will not exclude it the same. I will exclude it without the impact of that interest, because I need it to be levered cash flow, which is free cash flow to the firm, not to the equity as well. So I need here to calculate the tax again, which is this amount multiplied into that tax rate, and press enter. In the tax rate, I will make it absolute reference. Then we can drag the formula. So here is the taxes. What is the difference between the taxes included in the P&L and that one? Mathematically, I will show it to you so you will understand. The difference here between this tax and that tax is 541, which is the tax for the interest. I'm excluding it as well. That's why it's calculated here. That's it. So what is the net operating profit after tax? What is the difference between the net profit after tax, which is that one, and the amount I need here? The difference mainly is that I have net earning included interest, but if I need the net operating profit, which is after tax before interest and its impact on the net profit. So please confirm on 600 that you got the point we need to discuss here. So I will exclude the EBIT minus cash taxes, and we will make it like that. That's why it's called the cash taxes. It's not on interest or anything else. Okay, so let's continue. So here plus depreciation and amortization. So I will go here and link the depreciation and amortization, which is that line, like this. Okay. CapEx, I need to exclude CapEx, so I will make minus. I will go to cash flow. Here, CapEx, I will exclude it. No need to make minus. I will make it at the end, like formula at the end. So net change in working capital, I can find also that one in the cash flow, which we make it last time. Okay, so here, where it is, working capital, here it is. Okay, so I will link it as well. That's it. So to reach the unlevered free cash flow to the firm, we need to get that net operating profit after tax plus the depreciation and amortization to add it back, minus capex to deduct the capex, minus change in working capital, and we need to draw it like that to reach the free unlevered cash flow to the firm. Okay. Okay, hold on, please. Okay, so let's continue here. What we are doing, we reached the unlevered free cash flow to the firm. Okay. Okay, let's continue. So we reach the unlevered cash free cash flow to the firm. Now we need to calculate the IRR free cash flow, which will be the same. Plus here I need to put the current market value to the firm. So I will link it to the actual current market value to the firm. So how much it worth today? Can anybody answer that? It worth $16 per share multiplied into number of shares. So it worth 320. To reach the enterprise value, I should add back the debt, which is from balance sheet. I go here to get the debt, current debt, and link it. Cash, also I go to balance sheet, current cash. I'm not going to forecast, I'm going to closing cash balance. Okay, and I put it equal, not minus, like that. So the balance should be market value plus debt minus cash. It will be 210. Okay, so this is the current value of the company. Okay, so current as of today, based on the stock exchange market. So please confirm with 600 that you understand the formula and everything, so we can continue. Okay, so our target is to calculate terminal value, to be able to calculate the intrinsic value, and to calculate the rate of return, also the equity value, which is the value per share. Okay, so please confirm that you understand with 600. Yes, thank you, Raf. Thank you, Layan. Okay, let's continue and see what we can do now. Now we need to calculate the IRR, which is internal rate of return, using the formula called XIRR. Okay, so the value, which is here, comma, the dates, which is here. So better than using XIRR because it's in sequence. If it's not in sequence, if like that, like example, this one is not full year, it's a half year, so we can use the XIRR. But for now, we can use IRR simply and highlight all of that, press enter. Convert it to percentage, it will be 3%. This is the percentage of the IRR we have here. Okay, so let's continue and go for EV to EBITDA. To calculate the terminal value using EV to EBITDA is not required. We can use the perpetual growth rate. So the terminal value, how to calculate the perpetual growth rate? The perpetual growth rate is assuming there is a growth rate every year. So this growth rate will keep going on. So here, to calculate it, I need to get the last free cash flow to the firm, which is 80. Assuming it will continue till the end. So I will take that one, multiply it into 1 plus the 4%. Okay, close the bracket. Now I make the increment. Let's see the formula here. The terminal value equal to equal to terminal value equal to the last period, which is the free cash flow to the firm multiplied into 1 plus G percent, close the bracket. So this is the first thing we need to know. Second thing, I will divide it by 1, sorry, not 1, open a bracket, the discount rate minus the growth percentage to reach the terminal value. So let's apply it practically here on the Excel. So we make it like that, make it in brackets to have the priority, then discount rate minus the terminal growth rate, assuming it will continue forever. So this is 1 million, okay, this is the terminal value for the company, 1 million, okay? So based on what we have here, okay, assuming 80 will continue growing, okay, forever, and it will have this impact, okay? So this is the perpetual growth rate. Here, let's calculate the discount cash flow, which is enterprise value. The formula here we need to use is called MBV. MBV. So MBV, using the rate, which rate we will use? We will use the discount rate, that one. Let's open the books. This discount rate. What is the value we need to calculate? We need to calculate this value, comma, this value. Okay, then enter. It will have this value in the future, 686. Okay, that's it. So plus the cash, which is that one, debt, which is this one. So the equity value, it will be the opposite. Here the market cap, which is the equity value, we can name it the equity value. Here the same. Enterprise value is enterprise value. So in discount cash flow, I'm reaching the enterprise value. After enterprise value, I will reach the equity value. Okay, as we explained here, the difference, we said 100, 80, 20. After repaying from cash, I will repay for that one to remove it. Then the remaining will be available for them. Whatever cash, more or less. Okay, that's it. So I accept whoever in the waiting room, no worries. Okay, so let's continue. Go back to the Excel and calculate the equity value will be enterprise value plus cash minus debt, reaching 796. How it's more? Can anybody answer my question here in the chat box, please? How the value here, the equity value is more than the enterprise value. Here we said it will be 180, right? But why it's more? I need the answer here. Yes, exactly. Why? Yeah, I will say now. Why? Because the cash balance is more. I have debt to the bank with 30K. So this is the 30K I will pay to the bank using the cash. So difference between them is 109. 109 is available cash to be included here to the equity or the shareholders. Available cash to be increased their portion in the asset. So this is the concept of equity value. So the share price is the equity value. It's the shareholders value. So I will divide the shareholders value divided by 20, which is 39K 39 per share, $39 per share. This is the equity value. Let's make it here in the middle. That's it. Okay, this is, we reach our target today to reach the equity value. Okay, so that's it for calculating the discount cash flow. So please, if you have any questions, let me know. Otherwise, we can move ahead and go for the ratios and the charts. Also, another advanced functions after the break. We will have 15 minutes break for the prayer. Okay, so please confirm in the chat box with 100 that you understand the concept, and if you have any concern, let me know, please. Thank you, Shaima. I need everyone, please, to participate in the chat box. It's available for everyone. Yumna, Lama, Yasmina, Shahd, Muhammad, Najwa. Okay, please, in the chat box, everyone. I take random names. I will not be able to name everyone. So please. Okay, so please confirm with 100. Otherwise, you have question, please let me know. Okay, I think we are done with the first part of today's session. Let's go for the prayer break and come back after we done. Thank you, guys. See you after the break. Okay, guys, I'm back. Please confirm with 200 that you came back. You did come back from the break. Please confirm. Yes, thank you. So let's move on and go for ratio analysis, which is my preferred part. If you want to be a financial analyst, you need to focus on the ratios. Ratios is the most important part in the financial analysis career. Why? Because it's giving you a visibility over your financials. You break it down to items which you can focus on and you can enhance there. For example, if you need to know the liquidity of your company, you need to calculate some ratios. If you need to know the profitability, to answer some questions like, do my company is profitable? The answer is based on this most important percentage. It's not all, but this is the most important ones. If you need to know if your company leverage or not, okay, you need to calculate this percentage. If you need to know if your company is efficient in managing their inventory and the receivable and whatever they are managing, they are efficient in that? It is by calculating that as well. Okay, so let's see now the liquidity first. Liquidity here is something like, I need to know, do I have money or not? Do I am able to pay my long-term debt or not? Do I will be able to pay my short-term debt or not? Okay, so hold on. Okay. Okay, so this is our part. First, liquidity. Second one is quick ratio. Net profit margin is by mistake here. ROE is by mistake here. So the most important, current ratio, liquidity ratio. Quick ratio. So first we need to calculate the current ratio. Current ratio is equal to current assets divided by current liabilities, which is, I will do equal sum of AR and AP. Okay, with the cash for sure. Okay, I need the current assets to be divided by the sum of current liabilities, which is accounts payable. Then I will press enter. Okay, so the percentage here is wrong. It should be general, to be like that. Okay, and there is X at that. So this is the number of times. So my current assets, my current ratio is able to pay 20 times of my liability. So this company is very liquid. It's perfect. So this is more liquidity is better. Second thing is quick ratio, which is I have to exclude something which is slow moving. In the balance sheet, what is the slowest something in the balance sheet to be deducted? The inventory. So I need to get cash and the AR divided by sum of the liability, which is accounts payable only, okay, regardless the debt. And also I need the same formatting here to be applied. So that formula is representing the quick ratio. So the quick ratio is representing that your company is going to pay this amount immediately, no issues at all. The first one, inventory, is included. So I will not pay my debt using the inventory because it's not in my hand. Maybe it will be slow and will not be sold. I'm not able to sell it and convert it to cash and to be able to pay the payable. So that's why it's excluded and it's called the quick ratio. So this is the part of liquidity. Those are the most important formulas to calculate the liquidity of the company. Second thing, which is also important to the company, as a management, you focus on two things. You need to know the liquidity of the company to not go for bankruptcy or go for any deficiency in the cash. Profitability is the second thing. So you have to get both. So let's here see the gross profit margin, which is go to P&L and get the gross profit, this one, divided by, from the balance sheet, from P&L, the revenues, which is representing 62% as your gross profit margin. So if you are, this percentage means if you are selling with $1, you get 62 cents as a revenues, as a gross profit, and after you deduct the cost of goods sold. So this is a gross profit margin percentage. Second thing is net profit margin, which is you go to the P&L again and calculate the net earning, which is net profit divided by revenues as well. Drag the formula like this, it will work like that. So this is a net profit margin. First here you can notice it's 2% only, then it's increased a little bit. The third thing for calculating the profitability of the company is the return to the shareholders. If you sharing in a company, so what is your return? So this company, this formula is calculating that. The ratio saying the return, which is the net profit, divided by the shareholders' equity, which is this portion. But in our case, if we calculating something, balance sheet divided by P&L, we cannot take end of position. We have to take the average because we need to get the movement effect during the year. So we will go to calculate the net earning divided by, open a bracket, no need to open a bracket, make average formula. In this average formula, I will make this one gray first to be able to start from here. So P&L divided by average of this area, shareholders' equity, the ownership of the company. Then enter. So it will be 3%. So it's the beginning plus ending divided by 2, the average. And here P&L D3, which is 13. It should be E instead. It should be 14. That's why we need to change it here and make it, instead of D, make it E. So it will work now fine, because we should skip the first one. That's it. This is the formula. This is the result. So as a business owner, you know how much it's worth the company, how much it's giving you a return. So you will invest or not, didn't invest. It will be up to you based on the outputs you have. Okay, so I add whoever is need to be added. Please confirm with 300 if you are on the track and you can understand so far. If you have questions, please let me know. 300 in the chat box, please. Okay, fine. We can continue now. Perfect. Thank you. So let's continue. Leverage. What is leverage? Leverage, or we can name it solvency. Okay, what is the meaning of that? Solvency and solvency and profitability and leverage, sorry, is calculated based on debt and equity. Okay, so I need to know the debt and equity balance. So I will go to balance sheet. In the equity part, divided by the liability part, which is, I'm sorry, again, I lost because someone was asking for something. So let's go back. Debt to equity is the debt which I have in the company divided by total shareholders' equity. So this is the net percentage, the percentage for debt to equity. If you notice, it's keep decreasing because I'm repaying my payment, and the company became full equity at the end of the period. So it's a good situation, by the way, if you are planning to pay the equity, the debt you have holding, to be able to increase your shareholder in the company. Shareholder percentage, if we can say. Any startup starting from a debt and equity 50-50, for example, on the later stage, they pay their debt and make profit. So this profit will be better for your company to grow and to have more shares in the company itself. So it's a good situation if you can see here. So the second thing, that is your company profitable enough to cover its interest. So this company called interest coverage ratio, which is equal, you go to the debt, the net earning here before tax, okay, divided by the interest. So convert it after that to be in times. So here I am saying I can, let's make it on the first year, year 13, starting from here. So here you can see it's very low. I have to pay most of my EBITDA to pay for the interest. If you see in the P&L, you are achieving 3,500, you're paying big percent of it for that. So the coverage ratio is only 1.5 times. So you can, from your profits, you can cover 1.5 of it. Okay, so once you make repayments, so the interest is decreasing and your profits is increasing. That's why the percentage is keep on increasing. So it's a good indicator in the later stage, but at the initial stage, it was not a good situation. Okay, this is to calculate the solvency of the company. The solvency means the ability or the capability of the company to pay its long-term debt. Okay, to meet its long-term commitment. That's it. Let's go for the efficiency. How to know if your company is efficient or not. So to know that, you need to calculate the inventory turnover and accounts receivable turnover. Last time we learned how to do the percentage of the other one, which is the days of receivable and days of inventory and days of payable as well. We learned the cash cycle last time. This time we need to learn the inventory turnover, how many turnover we have for the inventory during the year. So the calculation is simple. Okay, I need to get the P&L and get the revenues. Okay, we need the inventory, so it will be the COGS. Okay, divided by the average balance of the balance sheet, the inventory here. So if I'm doing this average, I will make gray area for the first. So this is the condition we have to apply. So it will be the P&L again, COGS for the second year, divided by average of the inventory, which is here the inventory balance, then enter. So how many times? So I need to get this formula, this one, the formatting, sorry, the formatting to be applied here. So 5 times is the turnover. And regarding the receivable, let's calculate it as well. The receivable is depend on one line item in the P&L, which is the revenues, divided by average of the AR here. So also same formatting, same everything. So this is the formula. Let's read the numbers. It's not about getting the numbers and run away. We have to understand it carefully and know what is this number means. So the meaning of inventory, I am buying inventory with 100, for example, and I'm selling it 5 times 0.5 during the year, almost 6 times during the year. Here it became 5.17, 5.19, and keep so far till 18, it's almost the same. After that, it became less and decreasing. So this situation is not good at all because you are selling less. Okay, or maybe it will be good because I have more inventory in stock. So if I have inventory in stock, is it a good thing or bad thing? Please confirm with the 1 if it's good, 2 for bad. Please, I'm waiting for confirmation for your answer, please, in the chat box. I'm waiting for you. Yes, exactly. Nobody replies, I think. Okay, can anybody tell me what he thinks? Okay, let's see here. The reason is, the point is here, we don't have any efficiency because we are decreasing. So more stock is not a good thing, and more what we can call it, more less selling is not a good thing as well. So that's why we have low inventory is not a good thing. What about receivable? So it's collecting the money, it's almost the same, so no issues here in the efficiency of collection. Here collection, here sales. It's calculating the efficiency of sales, here calculating the efficiency of collection. So please confirm with 400 if you got the point and you don't have any questions, so we can move on. Yes, perfect. Thank you. Okay, let's continue. Now we are done with the ratios. I think no questions so far. So let's move on and check the charts. Based on my data now, I need to calculate the revenues and the gross profit, make a chart, a new chart for that. So how to do this? Just link the revenues from P&L to have visibility on the figures before doing the graph or the chart. Okay, so gross profit margin from ratios, I can get it here this one, link it like this. Control R. Okay. Hold on, please. Okay. So let's continue. This is the gross profit margin. Then we have operating cash flow also. We needed to make another graph. So operating profit from the cash flow. Here, that one. Okay, investing. This one. Financing. This one. Okay, and this one should be in minus because it's a cash outflow. So we need now to calculate it based on what we have to make the graph we need. So let's make it like this and start with the first one. If you need to make one graph includes both of things, so we will use a trick. We will do a trick. Let's see how to do it. First, from insert, chart, normal column clustered chart. Once we have it, we will go something called select data. Because if you see 1, 2, 3, and the numbers here, series 1, series 2, series. So let's edit. The first series is revenues. So I will select the revenues. This is the series name. Series value is this values, done. Second one, second legend, those called legends. So second legend is gross profit margin percentage. This is the series name. The value is that one. So we will press OK. Okay, that's it. So edit. Let's edit here. From axis label range will be the years. Then press OK. So you can see here that the years have been added. The date, the amounts is there. Here is the bars. We will adjust the bars. And we are done with the selecting the data source. Make that one more width. Simplicity is the mother of beauty. So we will delete that one. The grid lines. And we will go here. And selecting chart type. In the chart type, you have revenues, you have gross profit. So the gross profit, see, it's very small here because it's a percentage. So it's very small. So I need to make it on the secondary axis on the right and make it line. So once I do that, you see the example here. I will press enter. So this is the axis for the percentage and here the axis for the values. So the percentage is going like line. The values is, the revenue values is in the bar, okay, in the column. Let's highlight it in any color you want, like that, orange, and make that in blue, for example. Like this. The outline should be same color. Okay. From format data series. Okay, we can go here. Marker, line. So the line will be this color. So it will be converted to that color. Okay, so this is what we are targeting to do. So the chart title, I will write it from here. For example, we say profitability. Okay. I think we need to remove A from here. Okay. That's it. This is the first chart we're targeting to do. Let's put it here. The second chart for the cash flow. We need to do it. So again, we will start highlighting that one. Don't highlight like this. Just highlight the values from insert. From column chart, don't insert the clustered chart. No, insert the stacked chart. So it will show like that. So it's almost done. No need to do a lot of things here in this chart. Just again, go to select data, series. Series name is, the first one is operating cash flow. Second one name is investing cash flow. Third is financing cash flow. Edit the axis to make it like that as well. Then press enter. Then press enter again, like that. So please confirm with 500 that we have the same concept, so we can continue the chart to make it more interactive as a presentation. In the chat box here, I will name it cash flow chart. Okay. As well, also we will delete the grid lines to have more clear picture. The colors we can adjust. This one, the axis, we can move it down by doing format axis and make the label here to be distance from axis to make it low, which will be after the minus. It will not be in the half like this. So here let's highlight that one to make it in green. No, it's almost the same. Let's make it in this color. In gray, like that. So it's showing the cash from financing, feeding the cash from investing, and the cash from operation. Then the operation amount coming from the cash coming from operation is increasing until we reach it sufficient to pay the both of the debts we have, and the investment is going smooth, almost fixed, capex 15 every year. So I hope it's clear for you now. Let's move on. Okay, after the charts, we will have the visibility like that. So if you have any questions, please let me know. Otherwise, we will be good to go to the exercises we have in other exercises for the advanced functions we have. So I promise the rest of the session will be more interactive and will be more helpful. So please 500 to confirm your understanding so far. Perfect, thank you. So let's go ahead and highlight that in orange, in green, sorry. It's already in orange. So we can continue, close that one, save it, I'll go for the other exercises we have today in our agenda, which is not a lot. The most important part is how to deal with database. I will keep it till the end of the session, and we have lookups and advanced logical functions. So I will start with lookup as it's a little bit easy and relevant to a lot of people, which they are using, like Vlookup and Xlookup. The Excel is opening. Okay. Okay, so we have this simple table. This is the serial number, ID, employee ID. We have the name, we have the amount, we have the phone number. So based on that data, here I need to acquire the data from here. So I need to get the amount for each one. So let's take 24 as an example, or let's make it 74. Let's go and check if 74 exists or not. Not there. 11 is there, not there. 49, yeah, 49, which is Ramzi. He is 75. So I need here the number here to show here. So instead of doing all these steps, the Vlookup formula is very easy and simple to do. So how Vlookup is working, like that, equal Vlookup. Fine. Then open the FX and see. Vlookup value, what you are looking for. I am looking for the 63. This is the main thing I am looking for, which I put in the find tool. Okay, so table array. Where is the table array? ID, starting from ID here. Why I didn't start from column A? Because the condition of the Vlookup that the leftmost column in the table array to be the data I'm looking for. So I'm looking for 63, which is query ID. I will make the leftmost column to be the ID here, like that. Column index number 1, 2, 3. So I will calculate the ID number 1, number 2, number 3. So I will write here 3. Then range lookup 0. Then I will press enter. Not applicable here, that error means what? This error means I don't have this in the list. When I look for 74, if you remember, and 11, I didn't find them as well. So here, the not applicable means it's not there in the range. So it's wrong. So the issue in the not applicable here, that if I make equal sum for all of those, it will not work. Why it's not working? Anybody can answer in the chat box, please. Okay, so the reason because not applicable is there. So how to remove that not applicable? Using iferror. Okay, so iferror is a formula. Converting the error is to another thing. So iferror, if I make it outside, the value I need to convert is that one, H2, comma, what is the value you need to convert to? I will convert it to 0. So it will be 0. So not applicable, converted to 0. So what if number? It will be the same number. So this is what if error. So instead of doing here, I'll make it more complicated formula inside the Vlookup. I will make if error. So if error is the beginning of if error of Vlookup here, like that. Then Vlookup. So the Vlookup is the value. See here, if we open FX and highlight the if error, you will find Vlookup is like that. Okay, second thing, what is the value of error? For me, I needed 0, or I can use double quotes 2 times, which means with shift beside enter, it's double quotes, which means blank. I need blank. Then I press enter. So Control D. So this is the numbers converted, and the blank is not exist. Here is the total. So confirm was 600. So we can move on to the next sheet. Great, thank you, Yumna and Lam. Thank you, Dalia. Okay, so let's move on to something else, which is Xlookup. Vlookup here means vertically. Whatever is the most used formula is Vlookup, vertical lookup. So Xlookup is something horizontal lookup, which I have equal this table, but it's in the opposite. So the topmost column is the month, the most top column. So I will use the most top column. So first lookup value is August, which is that one. Table array is this area. What is the return I need to get? The rent, which is 1, 2, 3. So it will be 3 as well. Comma, no comma there, here. I select here. Lookup range 0, then enter. So it will be 1,500. Let's confirm what we have. 1,500 from where I can get this one. Here, 1, 2, August. Yes, this area. So what if I change here, instead of August, I make it November, for example, so that the number will change, so it's dynamic. Okay, are we clear? I hope so. So this is the Xlookup. So what is the Xlookup? I said Xlookup, right? Xlookup is what? It's a new formula created in Office 365, which is just recent, less than 1 year. So the Xlookup can be used here instead of Vlookup. But it's very easy and simple. So I will go here in another column. I will name it Xlookup. Okay. I take the same formatting to here using Alt-6 as we said before, which is best formatting. So let's do the formula here, Xlookup, which is very nice formula. I like it a lot. So what is the lookup value? Again, I'm looking for that. Same. So far, it's same and simple. Lookup array. What is the lookup array? What I'm looking for? This is the question. I'm looking for this one, this column. Return array. What I'm returning? This one. Done. There is no array like I'm selecting all under the top left column. The most left column should be this B column and all of this stuff. No, done. We are selecting the lookup array and return array. Even if this one here, I can select the return array to be the previous column. And this is very nice in the Xlookup. If not found, so now the trick. No need to do iferror again. If not found, what they will do, they will make it blank. Okay. That's it. Press enter. So it's a blank. Control D, like that. So take the same formula of the summation. It will be the same. Instead of doing iferror and instead of focusing on the leftmost column, it will be like this. So let's see. Take another version and see the benefit of Xlookup. I name it Xlookup here. So if I have the data like that. Okay, and I'm repeating the formula of Vlookup again. Vlookup. I am looking for that one. Where I'm looking at this one. So I should select like this. The ID should be the top left, the most left column. So I need to move right. So how come I can get it? It's not acceptable and not applicable at all to make like that because the amount is on the left. So I need to go back and change that one from here to here to be able to do that VLOOKUP. But what if I don't need to change the formatting? So Xlookup is the solution. Xlookup, if you need to do it, equal Xlookup. So the lookup array again, lookup value again, this one. Lookup array, I'm searching here. Returning what? Returning the amount. You notice it's on the right and the other one is on the left, which is, it was not there before. So here I will write 0. So like that, it will be changed to that. So I hope it's okay with you. Please confirm with 700 if you understand the concept so far, so we can go more advances together. Okay, يمنى داليا ريان يا طلاء شراد سارة روبا اوكي العنود ياسمينة يمنى all. Yeah, please. Yeah, great. So it's more interesting than valuation, I think, which is good. More interaction there and participation. Let's go ahead and continue with the next exercise we have. The next practical exercise we have is advanced logical functions. Ready for some brainstorming? Let's go ahead. Here we have school. In this school, we have 2 score or 2 material only. Let's say this Arabic language and this math, for example. So those topics, we have those score for each one in the school assumption. It's like example, not a long list, it's a small one. So here I need to show, is it pass or fail? So let's do it like that first. I needed to show here, this guy pass or fail. Let's make it manually to be understanding the concept we need to get. So condition 1, this is the 2 conditions. The condition 1, to pass. This condition 1, to pass. To pass, condition 1 should, score 1 should be more than 20, score 2 should be more than 30. So let's go manual by our eyes, read it. Ahmed getting 28 in the score 1, 30 in the score 2. So did he pass? Yes, so pass. Great. So Muhammad, not Muhammad, let's go for this guy. Ibrahim, 15 in score 1, which is less than 20. No, he shouldn't pass. Okay, so before I press fail, no, wait, I should check something else. The second condition, because there is exception. If he get 15 in the score 1 and 50 in the score 2, he should pass. So this guy didn't achieve condition 1? No. Did he achieve condition 2? 15, yes, wait, 20, no, he didn't achieve. Unfortunately, he's failing like that. So, and so on. So let's make it dynamic, because if we have a long list, it will be not easy to do it. So let's have it dynamically. How to do this? So let's explain it here in a presentation. Let's explain it here in this presentation. So for example, this guy Ahmed. So this guy, he have 2 ways to go. Those 2 ways, between them or. either to go like this or like that. So if he achieve in score 1, score 2, score 1, score 2, he achieved 20 and more, and here achieve 30 and more, he should pass. So here between this and here, if he achieve 15 or more, or he achieve 50 or more, here sure more than or equal, by the way. Okay, so here between them and. So this should be achieved together, and this should be achieved together. Between them, if this one achieved this package, excuse me, I need to highlight with other color. If this package achieved, then he will pass. Or if didn't achieve, but this one achieved, it should pass. Which means the package here, if this one true, this one false, he should pass. But here inside, if this one true, this one false, this condition will not work. That's it, to make it simple. So let's go again back to here, to the formula. So I will make the formula first simply using if function. Inside this if function, I will make if this one more or equal 20, comma, that a double quotes, which is I'm inserting text, pass. If false, fail, unfortunately, then it will be pass, because he achieved here in this one more than 28. But what if he achieved here 28 and here 10? He should be failed, so I need to insert that one. If you notice, I'm taking step by step. So I need to insert here, and instead of making nested if and making another if here, no, I will go inside that one. If you see this box, inside this box logical test, I will say and open a bracket. Once I press that one, I do that one, I press here. So once I press it, it open another one. So I will close from here the bracket. So it will be logical 1, logical 2, logical 3, whatever. So the logical 2 should be the 30 less than or equal 30, which is the condition here. So now we are good to go. Let's check. So this guy, if he is 30, if he is 10, this one should fail. Correct? So why he's not failing? Something wrong. Let me check. Let me check. So based on that one, it's true and true. Less than. See here the mistake. It should be more than. So it should be greater than. Yes, now it's correct. So here greater than this one and that one. So it will be 30. So it will work. 29, it will not work. That's it. So let's make it back to 30. So this is the formula we have. So this is exception. So the exception, we need to make the exception. So the exception here, to insert the exception, as we explained in the slide, it should be with or here. So or should be included. So, and we will insert or and close the bracket. Once we close the bracket for or, we press on or. So it will have and with two conditions is here. So I will take it, copy, paste it here. But instead of 20, I will make it 15. So this is another package. This one should be 15. Then press enter. So now we are good to go. So let's check. This guy achieved 15 and 30, so he is failed. Yes, correct. This guy achieved less than 20. Nancy achieved less than 20, right? She has to fail. but 15 in score 2, so she is eligible for that exception. I hope in your college you have another exception like that. That's it. So this is the condition. Okay. So please confirm with 800 so we can move on in another exception here for color coding. So please 800 if you got the point. If you have questions, let me know so we can elaborate. Please. 800. I need more 800s. So Yasmina, where? Yomna, Tala, Muhammad, Dalia, Aya, Anoud. 800, please. 800. Thank you. Thank you for participation. Let's continue. Now we are good with the report, but let me add something which is good. Adding some of the conditional formatting, highlighting the cell that contain text from home. Conditional formatting, highlighting that contain text, pass. So it's include pass. I needed green. Then enter. Also, again, I will go again. So it's a conditional text that contain fail. It will be in red, then enter. Very easy to use. Excel is very nice in these things. So here he's failing, but if I make it 50, he will pass and it will be converted to red and the formula is dynamic. And this is the beauty of F and logical formulas. We have OR and we make it combined formulas. And if we have the F function, we have long logical test, returning value if true to be pass, value if false to be fail, and that's it. So I believe we are good to go now for another subject. So if you have a question in the chat box, please let me know. Otherwise, we can move on to the next session, the next exercise, which is how to deal with database. So we have 20 minutes left for our session today. So it's enough, more than enough, to discuss how to deal with database. Most of our work is dealing with database, and it's not easy at all, I know. That's why I need to go and check the database. Remember this database we got last time, which is not logical at all, and it's going here and there. So we need to organize it first. Once we get it from the system, we need to organize it in order and start to make our reports. Let's go ahead. So, okay, so tighten the belt, the seat belt, and let's dive deep into the data. So I'm doing the same we did last time. I will not repeat it again. It's about organizing the data in one part. So control to jump from here to there. So we have the same data now. What is our target? To make a pivot table, something which is very nice. I recommend everyone to use it. It's very easy to use, no need for coding, no need for anything. It's just a tool. Here exists an insert pivot table. You can use it based on the data we have. It's highlighting the data fully automatically. How it's highlighted it? Because I just selecting part of the data, so it's selecting all of it. So I'm not comfortable to have it tight to the end of the data I have. I need it to be more, because if the data increased, it will be more later. So I will take 15,000 row. Where I need it in existing workbook. Where is the location? I will go to pivot table and insert it here, then okay. So we have this pivot table. It's nothing, literally it's nothing, no pivot table here. It's just area I can use to drop the pivot table fields in the right hand. If it's not there from field list, you can add it or remove it. Okay. Let's admit the people who wants to join, not all of them. The people which is have the name which is authenticated name. Okay, so let's go for the report. What is the report I need to do? For example, I need the sales report. So I go here, sales and revenue. I drag sales report, the sales representative here in the row. Revenues, I will get the total revenues here. So I will make it like that. Then I will convert it to comma style like this. So simply it is the same total. So why this appear? I should hide. How to hide it? Control 0. It will be filtered out. Sorry, not that one. Control minus to filtered out like this. You can see it's filtered out automatically by using shortcut control minus. So now we are done with the small sales report. But wait, I need to insert something. I need to know the sales by product. So I take the product from here to make it like that. So this is the products: ladies shoe, dress, pants, socks, sports shoes, suit, t-shirts. So this is the product. Here is the sales representative. So Adam sold 20,000 dress, 20,000 value amount of dress. Here's the grand total as well. So this is simply how to use pivot table. Here is the fields, 4 fields, 4 dimensions. We can say here's the region. We can filter the region from here to select the region we are targeting, or we can go to insert slicer and make it with the region, then press OK. So here the region, I can select it like that, and the numbers will be dynamically changing and clear to go back to original situation. So any questions in pivot table? I believe we are good so far. Simply, this is the basics of pivot table. There is a lot of advanced things, but we are not going to go through it today, maybe later on. But 900 for understanding the basic usage of pivot table, please. I'm waiting. 900, please. Perfect, thank you. So what if I need some dynamic formulas and more organized? So I will make my own report and do the formula. So here the use of Sumifs and Averageifs and other stuff. So how to do that? It's very simple. Okay, I need here I have a small report. Okay, and I have total sales and the number of transactions. I need both of them. How to get that? Equal formula called Sumifs, the third one. Sumif is outdated. I not recommend to use it because Sumifs is Sumif is one condition only. Sumifs is multi-condition, and we can use it for one condition as well. So no need for Sumif at all. I recommend Microsoft to remove it. So sum range here. From here, I need the total revenues. So I will take from here, Control Shift down, then F4. So I will make it 15,000, comma. So this is the first requirement, the sum range. What is the second requirement? The criteria range. So here in the raw data, I go to sales representative, Control Shift down, F4, go 15,000. Okay, so both of them should be aligned together, should be from 1 to 15, from 1 to 15. It should be the same area. It should be GGBB, so it's one column only, not more than one column. So it should be aligned the ranges, sum range and the criteria range. This should be condition we have to understand. Okay, so let's remove that one. I make it by mistake. I should select criteria 1 and highlight that one. So here, the amount of sales Nancy have been sold. Okay, I need to make best formula, Alt 4 for me. and make it Control-Shift-1 to convert it to comma style as well. And we have to go to raw data again and check something, which is the pivot table. Where is Nancy? Nancy here. 204450, 204450. Same result, but in another different way. So let's here calculate the number of transactions. Number of transaction called something with, remember last time we talked about count A, there is something called the count FS. Same everything, but instead of doing that, it will be without some range. Yeah, it's criteria range 1, criteria 1. And we can increase the criteria as much as we can or as we want. So what I recommend, instead of going through all that exercise again, so I'm going to take from this formula, this part, and Control C, then count FS, then Control V, enter. So it's 2,233, like this. This is how much transactions she have done by counting the number of rows for Mariam. It's the number of invoices, not the quantity, because some invoices include like that 4 units, here 4 units, but how many line items for Nancy? It's 2,400 over the full period we have. So what if I don't need it for the full period? The full period we have in the timeline here from year 15 until we reach year 17 or more. It's more than 2 years or 3 years. So what I'm recommending here, to do it with strict specific dates. How to do that? By using these dates, okay, to make it included in that formula. How to do this? I will go to insert another criteria, which is the date. So I need it to be less than, more than April 16 and less than August 18, and I need it to be linked to this cell, so it will be dynamic. How to do this? Sorry, I'm going very fast for time constraint, but let's hope it will be enough. Okay, so if you have any questions, let me know, please. So I will select the criteria range 2 and 15,000 here, comma, no comma, I will go tab to criteria 2. Criteria 2, we have here that date, but if it's a date, I cannot select like that. I should say something like double quotes, okay, more than or equal, close the double quotes, and this one. So this is the code for inserting the date. So it's reduce the amount because it's a filter after April 16. So this is the first thing to make it duplicate. So I will repeat it again. Okay, but make it on that one. And instead of C6, it will be D6, and it will be less than like this. So it's filtered out. So I can now say I need 8, 15, 20, 16. So it will be very small amount because it's a very short period. So based on the selection, so I can take the formula again, but before I take the formula, I need to look it down, the C to be freeze as a row, and take the formula like this. So it will be dynamic based on the selection here. So the last thing to close today is the best thing I like in Excel, which is the drop-down menu. I need here to have drop-down menu, like when I go to any website and purchase flight ticket, for example, I have drop-down menu to select the country I'm traveling to, for example, or something. So here the products, I need the products to be in drop-down menu. How to do this? So there is a new formula in Excel Microsoft 365 called unique. So this formula, just you go here to the data and highlight the products, all the products, like that, without the header for sure, and highlight them. So it will fill the unique values. Or let's go manual work before 365, taking this copy, going in area, gray area or space to do that. Then data, remove duplicates, and okay. So it's the same result here and here, but this one is dynamic. If I insert here, for example, product called anything, okay, we go here, okay, it will not add. Why? Because this range I make it small, so I will make it 15,000. So it will insert something and will insert also 0 because it's not there. So let's go here and make our drop down menu. How to do it? I will select the cell, go data, data validation, from here, data validation. Then, okay, the list, from the list, the source, I need to select it like that. Then I'll press OK. Hold on, please. Somebody is trying to, yes, he left already, I think, or he changed his name, I am not sure. So let's see. So from this one drop down menu, you can find the list of the products we have. So I need to go, once I select the drop down menu here, I need this one to be dynamic and link it to the product as well. So how to do this? Let's go here, open that one and go insert a new criteria, which is range 4, criteria 4. And we will have to go to the products. Also it should be same everything, 15K, then press enter, sorry, not enter. Before you press enter, you need to select the criteria itself. Here, the criteria number 4, it will be the product which is dynamic and the F4 to freeze it or to lock it. So the number became less because it's a filter on a specific thing. So let's check our inputs. Okay, from 10th of April till 15th of August, Bands, Nancy, this amount, Adam, this amount. And let's check the figures, the final result we have. From here, data filter, go pick from the filter the name of, for example, Faisal. Here, let's pick the period we just selected, which is from 16th of April. Let's hear from here, between, and pick a date from here, better, 16th of April. Better to write like that, 4/16, 16, and here, and or it will be and, both conditions should be achieved, 8th of 16 of 16. So let me check the dates exactly to make sure, 10th of April till 15th of August. So the date again, I will go back to the date again, from filter, between, here to adjust it to make it 10th of April, and here to be 15th of August, and we are good to go. Region, no filter on the region, the product is bands, I think. The color, nothing in the color, the units, so here, 734, Faisal should be 734, 734, yes, great. So we are matched, we are good to go. Here, 734, same result we have based on our dynamic formulas we have done, based on all of that selection. Once I change from here, or I change here, or I change here, or I change here, or anywhere I change, it will be changed based on that. That's it for today. we are done with our financials, formulas, and the ratios and valuation today. Any questions, guys? Otherwise, please confirm with 100 in the chat box that we are fine and we can move on for the closing this session and finalizing it. So, any questions before we done? Thank you, Roba, Rahaf, Yumna, Layan. Any other questions, guys? Alanud, Aya, Dalia, Najwan, Yasmina, Yumna, Dana, Tala. Okay, any questions? I'm calling one by one. So please, participation, yes, 100, thank you. Thank you, Aya. Okay, guys, thank you for attending today. I hope you enjoyed and you have benefit. It will benefit, this session will benefit you in your future career, inshallah. The reference will be on our page on Facebook. You can return to it, and also on YouTube. I will try to put the link in the chat box now, so everyone will be able to go and follow and see our video. Okay, so let me post it, and there you will find our YouTube channel as well. Thank you for everything. So let's see tomorrow. Let's see what we have next. Any questions? No, nothing at all. No questions, guys. Thank you. And any questions on the Facebook, you can ask me, or YouTube anytime. Thank you for dropping by, and see you next time, inshallah. Happy to see you today. Okay, so thank you. Okay, goodbye. Peace.